Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Thursday, January 30th, 2013. Well, the market got back to its downward ways today. We had all three sides, down significantly. We broke out of those little patterns to the downside, and we had negative price action across the board, both on the top line and also internally. Internally, we were minus 1,650 issues on the New York side, minus 1,400 on Nasdaq, and the VIX was up to 1735. That's a $1.50 pop on the day. So let's move on and take a look at some of the key levels here for the major futures, and a couple of these are going to be pretty important tonight. All right, let's start with the good first, which is the Nasdaq side. The Nasdaq side of the market did decline today and break out of the inside day from yesterday to the downside. But the good news is that we're still holding above the pattern right now. The pattern is this rising wedge. We're holding above the rising wedge breakout. So when we do come down to interact with this, we're going to have support here, and it should be fairly material, because you can see this is a pretty long-lasting pattern here. So it's definitely going to have some merit and some teeth to it when we come down to interact. So for now, Nasdaq is above this level. Here's a look at the ES side of the market. The ES side came down today to interact with it, with the level for the second time so far. We broke out the two-day pattern to the downside, closed back up within the range from 2 days ago. So that essentially is not as negative as breaking down and losing that range. So you can see that since we didn't break down, you can already see the power of this pattern starting to work. Let me just back this chart out. I'm going to zoom in here, or actually zoom out, and just show you the length of the pattern here, just to give you an idea of how powerful and important this is going to be. This pattern has been tracing out for more than a year, so this is a very long-lasting pattern that's been in place. We had resistance here when we touched it to the upside. A second touch up here. We finally broke above it on the third attempt, and you can see that the pattern acted as support both here and here. So that makes this now basically a double level. Not only was it important to the upside, but when we pulled back to it, you can see it acted as support. And we're back down there once again. Obviously, this time the market looks much more vulnerable. But this level for the ES is going to be really, really important. So make sure that you're aware of where the lows are from the last 3 days. All right, here's a look at the Dow Jones futures. We don't look at these a whole lot, but I think it's important to note that we have now closed below this level. If we follow through below today's low, we're going to have this pattern officially broken. Right now, it's an unqualified break, because this is really the first close below it. And again, let me just zoom out here on this chart so you can see the length of this pattern. It's a different pattern. It's not a rising wedge. It's really a rising channel. So it's not quite the same animal, but it's obviously very, very key support. We had the same touches. Here's one, here's two, and then the breakout. We found support here once, and we're coming back down here again now. So this definitely looks a little bit more vulnerable. And you can see the overall uptick in volume as we're coming down to this key area. All right, now here we're going to take a look at the levels. Here's the good. Here's the Nasdaq side of the market. You can see that when we start to overlay this with levels, it does look a little bit more precarious. We're below the 10 and the 50 DMA. We're only 4 days down now in the seeker setup phase that's currently running to the downside. We're still above that 4-ace level at 34.3750. That's going to be important. And then next is going to be the static trend line at 34.14, which is also going to be roughly coincident with where that rising wedge is on the naked chart that we just looked at before. CCI is still oversold, but the MACD is coming down to that zero line. And if we do break the zero line on the MACD, we're going to start to pick up momentum to the downside. Remember, it takes time for markets to start to give up the upside, but once they do change direction and change course, then it can be very substantial. Let's move on and take a look at the ES futures. A little bit closer here to the static trend line. Static trend line here is above the 4-ace level, so 1750 is the next real level on the Murray Math box, and we're going to have support from the static trend line at about 1761. The other thing to keep in mind here is that we're a little bit further along in the bar count. In the Nasdaq side, we're only 4 days down, but this one we're 6 days down. So we're 2 days closer to that 9 bars. Thing to watch here on the MACD though is we have penetrated the zero line, so if we do roll to the downside, we can start to see some pretty decently sized bars here. Here's a look at the TLT, which had another up day. A couple key things happened today. We did push up to a new high, which is always notable. The other thing was that we did smack the static trend line that's in place right now. So that's a key level. So what we've done here is we've made good on the 13 exhaustion signal, broken above that, validating it, and we've run all the way up to the active static trend line now. So that's a big number. The other thing to keep in mind is the 200 DMA is pinching down to the downside here, so that's going to make this area even more important and more potent since we have two levels lining up together. Let's take a look at the gold miners. Gold miners, the gold futures didn't do too much today. They were kind of whippy on the announcement, but at the end of the day, we're still above the 10 EMA, so we're still short-term positive. The MACD is above the zero line, but we really haven't gotten any kind of a clean release just yet, so it's more of a grinding lift to the upside. Oil futures are still 9 days up here and going sideways. We're above the 10, but we don't have a whole lot of development here to the upside. Next levels are going to be the static trend line, which is coincident with the 200 period moving average at about $99 to $99.50. As far as the individual sectors today go, we definitely saw a flight to quality today, or a flight to safety rather, with money rotating into the XAU. We saw declines today in all the other majors. We saw declines in the SOX, which was nominally weak. The BTK was down a little bit, and the BKX was fairly weak. That's the green line. So you can see all the risk-on asset classes are starting to move to the downside. Starting to see a little more risk-off action here in the S&P TLT cross. The TLTs were up on the day while the S&P was obviously weak. We're really starting to see the market change character here, and this is definitely confirmation that traders are taking a more defensive posturing. And we're starting to really move to the downside here and starting to accelerate. You can see the angle of descent here on this curl down from the channel upper boundary. Here's a look at the sectors ranked from best to worst. The best sector on the day was the XAU, as we talked about before. Consumer durables were also at the top of the gun, so also at the top of the list. So definitely seeing a more risk-off posturing from these scans. The airline index was weak. The defense was weak. Broker dealers were weak, and the transports were notably weak. We have weakness with the oil services. So the oil services being weak along with the transports is a definite negative development. Let's move on and take a look at a couple of the charts. Here's a quick look at the XAU. The XAU was positive on the day but didn't make a new high. Keep in mind that if we do make a new high on the move here, we're also going to be making a push above the 200 DMA, which is going to be really notable, which would put this chart above all three major moving averages, the 200, the 50, and the 10. BTK today was kind of indifferent. It was a little bit down today, but kind of a wide-ranging day. We're just still hanging on onto this 8/8 level, which is very common when you get down to these big levels. But once we release one way or another from this, we've got some space. We've got a good deal of space back to the upside, if that's the direction we're going to take. We've also got a good deal of space to the downside, which is going to take us all the way down to the breakout level, which is where the 50, the 6/8 level, which is the breakout level, and also the static trend line is living. We've got a fairly fresh downside cross here on the MACD, and you can see the MACD is elevated here, so we do have plenty of power to the downside if this wants to turn lower. Oil services were lower, definitely following through here below the 200 DMA. We're now closing decently below the zero waistline. That's a big development. So now in the oil services, we're actually into the oversold territory on the GAN box here. So we're going to have a level at -1/8, and then a more important level and bigger support at -2/8. Transports kind of still just hanging on here, just bouncing around this 6/8 level. We've got a king, queen, king here, where we've got three candles essentially all stacked up against each other. Once we break out of this range, we should have a pretty good move. Note how now that we're below the 50 DMA, we're starting to see that act as resistance. Next target to the downside is going to be the static trend line at 70.78. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.